So we're going to take a look at the multiple choice questions now from 2020 paper 2. So just a reminder about how to do it. Remember to colour in whichever one you want to choose. If you subsequently think that might be wrong, put a cross through it. If you go back to that and think, actually, maybe that's right after all, put a circle around it. Okay. So first one, which transaction has a cheque counterfoil as a source document? Well, that's going to be a cheque payment. So let's have a look here. Not a cheque deposited. That would be a paying in slip. It would be a cheque paid to a supplier. That's going to be the answer there. A cheque returned due to being out of date would show up on the bank statement, as would a dishonoured cheque from a customer. Okay. Number 2 then, J. Jones received a payment from D. Smith whose debt had previously been written off as irrecoverable. So this is an irrecoverable debt recovered. So we're going to be paying the money into the bank and then crediting irrecoverable debts recovered. So the answer there is A. We don't want to do anything with D. Smith's account, and the only one with money being paid in is that option A. So that's the answer. Which is the correct formula to calculate markups? Remember, markup is gross profit expressed as a percentage of cost of sales. So the answer there is going to be A. So question 4, which are all credit entries in the cost of sales section of an income? Well, carriage inwards is a cost, so that would be a debit, so it can't be that one. Carriage inwards is a cost, so it still can't be that one. Closing inventory is a credit. Goods for own use is a credit. And returns outwards is a credit. So I'm thinking it's that one, but let's just check this. Goods for own use, yep, that's okay. Opening inventory, though, is a debit. Returns outwards, so it's definitely going to be C for number 4. Number 5, Fred is a sole trader and is converting his business into a private limited company. He will be the only shareholder of the company. So he's not going to lose control. He's actually going to gain limited liability. His ownership is not diluted because he's the only shareholder. His profits will be subject to corporation tax, though, and he's not going to receive any more capital, just the money he's putting in by himself. So the answer there is going to be C for number 5. Okay. Donovan Limited is planning to expand and will require additional finance. Its statement of financial position includes non-current liabilities of $750,000 and equity of $1.3 million. Which method of funding will decrease capital gearing? So remember, gearing is debt, which is the non-current liabilities, divided by capital employed, which is the total of those. So anything that decreases debt or increases equity will reduce the capital gearing ratio. So a debenture will actually increase gearing because it's more debt, so will a long-term bank loan, and so will a mortgage. But if we issue ordinary shares, the equity part of that equation is increased, so that will reduce the gearing percentage. Number 7, Elock runs a sweet shop. He has taken several boxes of chocolates as gifts for friends. What are the ledger account entries to record these transactions? Well, anything to do with inventory, please never be tempted to adjust inventory for goods for own use. It's wrong. We've got to reduce purchases and increase drawings. So the answer here is going to be C. We're going to debit drawings, credit purchases. Remember, that's one of the credit entries in cost of sales. Number 8, a business paid £18,250 for wages and salaries during the year ended 31st of March 2020. Wages and salaries at the start of the year owing at the 1st of April, so they were £2,190. So that was an accrual at the start of the year, and they were owing at the 31st of March 2020. So there's an accrual at the end of the year. Now remember, an accrual at the end of the year will actually increase the expense, so we'll add those two together, but an accrual at the start of the year will reduce it. So we'll go 18,250 minus the opening accrual and plus the 2,740 closing accrual. So the answer there is C, which is 18,800. Number 9, a business had calculated draft profit for the year ending 30th of April 2020 as 43,950. The profit was calculated before the following information had been provided. So wages and salaries of 5,625 were owing. So we need to do an accrual for that. So that's actually going to reduce the profit. So 43,950 minus 5,625 will reduce the profit. But insurance of 2,175 was paid in advance. So if we deduct that from the insurance, the expense goes down, the profit will go up. So 2,175 added on there. So the answer is 40,500. It is B. Okay, and then the last one in this little section, in the books of Maria, the credit balance on the payables ledger account for Peach Traders is 21,850. So we've got the credit balance brought forward. The following information has not yet been included in the payables ledger or purchase ledger account for Peach Traders. So we've got interest charged on a late payment and a contra entry. Now, if we just draw up a little T account for this one, so this is the account for Peach Traders. We've got the balance brought down. On the credit side, it's a liability. It's the amount we owe to Peach Traders. If they charge us interest, that's going to be a cost to us. So we're going to debit the interest account and credit Peach Traders, 125. And if there's a contra entry with the receivables ledger, that always reduces the balance. So the contra is going to be with the sales ledger, £580. So let's work out what the balance is. 21,850 plus the 125 interest they've charged us minus the 580 contra is 21,395. So hopefully that's given you some clues as to how to tackle these multiple choice questions. Thanks very much for watching.